Form 8938 is the FATCA form that lives on the tax return. It's separate from the FBAR. The key idea is this: you're reporting specified foreign financial assets, and you only file if you cross the threshold for your filing status and where you live. On the EA exam, they love mixing up FBAR rules with 8,938 rules, so keep them in separate mental buckets. So what counts as a specified foreign financial asset? Think financial and foreign. Foreign bank and brokerage accounts held at foreign institutions count. Foreign stock or securities count if they're not held in a U.S. brokerage. Also included, foreign pensions or deferred comp plans, interests in foreign estates, foreign partnership interests, and foreign insurance or annuity contracts with cash value. If it's a financial right tied to a foreign issuer or institution, it's a candidate. Here's a classic exam trap. If you bought foreign securities through a U.S. brokerage account, that's generally not reported on Form 8938 as a specified foreign financial asset. The asset might be foreign, but the account is maintained by a U.S. financial institution. The exam will try to bait you with French stock and hope you ignore where it's held. Next, the filing thresholds. For taxpayers living in the U.S., single or married filing separate triggers at over $50,000 on the last day or over $75,000 at any time. Married filing jointly triggers at over $100,000 on the last day or over $150,000 at any time. Notice the pattern: 2 tests, year-end and peak value, and you file if either test is exceeded. If the taxpayer lives abroad, the thresholds jump a lot. Single or MFS, over $200,000 on the last day or over $300,000 at any time. Over $400,000 on the last day or over $600,000 at any time. On the EA exam, if you see expat, your first move should be to switch to the higher threshold table before you do any math. One more rule students miss: Form 8938 is only filed if there's an income tax return filing. Number 1040 requirement, number 8938, even if the assets are huge. For example, someone living off inheritance with no U.S. filing requirement might still need an FBAR, but they wouldn't attach Form 8938 because there's no return to attach it to. Finally, what does not go on Form 8938? Directly held foreign real estate doesn't count. Your house abroad isn't a specified foreign financial asset. Same for directly held tangible items like art, gold, antiques, jewelry, and other collectibles. And foreign currency you hold yourself doesn't count either. But if real estate is held through a foreign entity, your interest in that entity can become reportable. Aisha is a U.S. citizen. Her father, Rohan, is a citizen of India and owned a 75% interest in an Indian corporation. During the year, Rohan dies, and his 75% ownership passes directly to Aisha. Besides her regular income tax reporting, which special form must Aisha file to report her newly acquired ownership in the foreign corporation? Think about which form is specifically for U.S. shareholders of foreign corporations. The correct answer is Form 5471. This is the information return for U.S. persons who meet certain ownership or control categories in a foreign corporation, like acquiring a large ownership stake. Form 8938 is tempting because it reports specified foreign financial assets, but it doesn't replace Form 5471 when you have reportable foreign corporate ownership. Which form requires U.S. persons to report various types of foreign assets, not just bank accounts? The options include Form 8938, Schedule B, Form 8300, and the FBAR. Think about which one is tied to FATCA and covers broader foreign financial assets. The correct answer is Form 8938. It's used to report specified foreign financial assets, which can include foreign accounts, plus things like foreign securities and certain interests in foreign entities. The FBAR is the tempting wrong answer. It's common and it's foreign reporting, but it's focused on foreign financial accounts, not the broader FATCA asset categories.